Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, March the 19th. The year is 2021. Let's talk trading. It's time for the weekly wrap up. And if you're just joining us, or if you've been here for a while, these videos are for educational purposes only, and your results may differ from mine. So let's go take a look and see what's going on this week. Okay, looks like all but one weekly gap filled. The pound is 43 pips, 44 pips now under the weekly open. A lot of action on the pound, especially the past couple of days or so. And as we look here at a daily chart, we can see the opening range for the month and the opening range for the week. And you can see today we actually broke out of the opening range for the week on the high side and on the low side. And you can see prices come right back and closed within that range. In fact, only on Wednesday did we have a close outside of that range. So for the week, it looks like the pound has been kind of range bound here. For the year, 231 pips above the yearly open. We're 55 below the monthly and 44 below the weekly and 51 below the daily. Another interesting thing happened. Let's see, the daily inside bar 9 bars ago. You can see we dipped below it. Now we're above it again. So the inside bar traders were paid off. The range, 129 pips today. Nice range. You can see we broke into the upper wick zone of the previous day, came right back out, broke out of the low of the previous day, and we broke out of the previous low of 2 days ago, right there. So you can see where price is. And we talk about looking left. So when price got down here and you look left, you see a couple of green candles and you see a wick. So it was definitely some buyers ready to push price back up. So when you see here, all this represents is price pushing back up, especially if you use those tug of war candles that I created. You'd see nothing but green to the left. And so it would give you confidence or confirmation to go long off of that low. I got a funny story to tell about that. I'll get to it in a little bit. So pivot opened above the daily open. So you pivot traders, if you usually don't trade during the first hour because the spreads are so whacked. So the first trigger long was really here and it paid off, hit the pivot. And then time to go short. You see you got a trigger here, and the short zone was just below the weekly open. So once again, trading that weekly open crossover would have paid off handsomely if you'd like to trade that crossover trade. The green rats got paid off. So I might as well tell that story right here. Let's see, where did it happen? Let's see. Yeah, right here. This was so funny. I had gone long at the 40. Actually, it was like at 39. I think it was 39.3. I went long. And it came up and it actually hit almost 60, 59.9. So when price was moving up, I moved my stop loss to break even plus 1, 40.3. And I was on the phone with Walmart. And as you can see right here, if I can get this computer to, there you go. The low was, once again, the low was 40.2, 138.402. So it took out my break even plus 1 stop. It came right down, just took it out, and then reversed because I put the trade on because I was thinking price was going to go up. So I basically gave back 19 pips and I was on the phone with Walmart, and I was just laughing. It's just like, because I said, the market didn't do that to me. The market doesn't care about me. The bottom line is the market just moved the way the market moved. It just so happens my stop was set at one point above that low point, and so I got stopped out at break even plus one, as opposed to taking 20 pips when I had it. So, but you know what? That's okay. I just think it's funny. Thing is, I was targeting a price much higher than the 60, and I had made my decision that, hey, the worst thing that's going to happen is going to be break even plus one, and that's what happened. So instead of the market, continuing up, it decided to come back down and then go up. So if you really, if that happens to you and you really think they're going to move the market 20 pips just to take out your lonely break even plus one stop loss, you got another thing coming. So, like I said, maybe next time when Walmart's on, he can tell you how much I was laughing at that, because I couldn't stop laughing. I mean, what are the odds? But anyway, that was my a rat zone trade for the day. But I had actually picked up another trade. I'd made 19 pips, so it all wasn't lost. I was just that was this trade was in one account, and the other one was the other account where I did take the profit when I could. But this one, not so much. Okay, enough on that. Let's move on. I guess things are slow. Here we go. Look here. For the pivot traders, it got down to S2 and reversed. I should probably put up my price travel analyzer or the real-time price analyzer just to show where, taking trades, reversal trades at these levels, how profitable they can be. Once again, we took out that pivot. The weekly open was here, the weekly pivot was here. We basically cleared out all the pivots. So once again, we took out the weekly, we took out the daily. We still have those 3 open pivots for the month of February, though. Still have those 3 to deal with. And we've taken out the monthly, so pivot traders were rewarded. Wick zone traders, pretty much the same, were rewarded in and out of the zones. You can see here, barely touched the upper, came back down, came through the lower wick zone, crashed through below, and the rest down here was history. The range, biggest range of the week at the 73 percentile. So this whole week was pretty much, quote unquote, somebody would say above average, but it's not, because these are percentiles. This is the average. And it's a difference, because with the average, you add all the ranges together, and then you would divide by 100, because we're looking at the average range of the past 100 days here, or 100 periods. But with the percentiles, what you do is you take each one of these and then you put them in an array and you sort it. So you put the biggest one on top and the littlest one on the bottom, and you see where these lie into it. So you can see 97 was almost in the middle, okay? But that's not the average. You see, the average is 100, but 97, you're at the 51 percentile. So, and that's why I like percentiles a little more than averages, because I think they tell a truer story. How many, this is real simple. How many occurrences was it below 97? So you can see here, this is probably 97.1 or 0.5 or 0.9. So it's actually at the 52 percentile. And this 97 might have been like maybe 97.1 or 96.9. It's at the 51. But still, this says, at least 50 out of the last 100 were below this level. That's because this is at the 51 position. So I think it gives me a little more accurate view of where price is in the terms of range and the base trades, especially reversal trades. Here at 193, looking for those rat zone, or I'm sorry, at 129, 73 percentile, looking for rat zone trades. Definitely the advantage, statistical advantage is mine. Let's see, we've got for the daily, open minus low was 93 pips, open minus, or high minus the open was 35. So taking those buy zone trades paid off on the day, as we saw earlier. The rat zone high minus closed 90 or 89 just now, closed minus like 39. So rat zone traders were paid off once again statistically. Here you got 39 is only at the 42% level. So it's like, wow, it's probably, if anything, it might even be bigger than 42. Or bigger than 39 at the 42. Look to get closer to the 50 level, and you can see here it's 47 pips is at the 48 percentile. So, but a lot of traders really aren't into statistics that deep, so it doesn't really concern them, and that's okay if you don't trade that way. Breakout traders from the previous high, you can see here we didn't break out of yesterday's high, but we did break out at a low, 67 pip. The previous low minus the low. So if you took that break, there was 67 pips potential, 89 percentile. So you can see here when it does break out, negative means it didn't break out. It missed it by this many pips. But here we had a 44 pip breakout. And then on Monday, there was a 10 pip breakout. So when it breaks out, there are usually some nice breakouts as opposed to, just a pip or two. Here we've got, on the high side, we had a 31 and a 65. So taking those, breaking out of the wick zone, basically to the breaking out of the top of the upper wick zone or the low of the bottom wick zone, there's pips to be had. Pips to be had. Let's see, was there anything else in the ranges? No, but let's see. I think somebody had a question about some indicators. I'm trying to remember what that question may have been. I think they wanted to see these indicators again. And I'm thinking Walmart posted his chart over on my Facebook group. So I think what I'll have him do is send me the template, and then we can go through the indicators, and maybe we can look at them on a one-by-one basis, so you can see what you need and what you don't need, or what's the minimum. Because see here, you can just pretty much look at the sweet spot lines every 10 pips and just trade with the H1 candle color taking the first break. This hour, you would have been short at 80, and you had a nice potential there. We had a low of 66, so you could have probably picked up somewhere between 10 and 14 pips. Especially there was a one ball on the top. So taking that reversal trade may have paid off for you. I'm trying to think, was there any other question out there? I don't think there was. Yeah, and for you traders that asked me to work on code, it's just been a busy week. Haven't really had a chance to work on it. Plus, I've been working on some other stuff so you're just going to have to be patient. I know some people want me to put alerts on certain indicators, and that's just something that, the dashboard has alerts, and most of the indicators, there's a corresponding function in the dashboard. So if you really want alerts and you want them now, then you can use the dashboard to do that. Oh, I know. Somebody wanted to know about the about this indicator, the wick zones. The original one was called HTBL for high top bottom low zone, and that was a 2014. So that's where that indicator came from. So everybody, I hope you had a profitable week and day. I hope you have a very fun and safe weekend, and when you come back to your trading platform, Always remember, never forget, it's not what you trade, it's how you trade it. So drain the banks. This is the Rumpled One, over and out.